This isn't just another news update. This Wednesday could be the catalyst that sends select altcoins into orbit, or sends the unprepared scrambling. Forget the noise, forget the hype for a second. We're going to cut through the confusion and give you the raw intel you need to navigate what's coming. Because if you play your cards right, this could be the week that changes everything. Welcome back, crypto warriors. Over the next 23 minutes, we're not just going to tell you what's happening. We're going to arm you with a tactical briefing for Wednesday and beyond. This is about understanding the forces at play so you can make informed decisions, not just react to the chaos. Here's what we're going to break down. 1. The Wednesday doubleheader, why the FOMC meeting is only half the story, and a crucial government report that could have a far bigger impact on your altcoins. 2. Critical price levels to watch, where Bitcoin, Ethereum, XRP, XLM, and SUI need to hold to avoid deeper corrections. 3. The macro secret weapon, how the broader economic landscape, particularly the M2 money supply, is quietly setting the stage for a potential altcoin surge. And finally, why one specific project, HBAR, is uniquely positioned to not just weather any storm, but potentially emerge as a dominant force in the next crypto bull run. This isn't about hopium, it's about strategy. Let's dive in. So, everyone's talking about the Fed and interest rates on Wednesday. And yes, that matters. Higher rates can suck liquidity out of risky assets like crypto, making investors more cautious. But what if I told you there's a potentially bigger, more direct force about to be unleashed on the crypto market, and it's coming straight from the halls of power in Washington? We're talking about the President's Working Group on Digital Assets and their 180-day report, due out on the very same day as the FOMC announcement. This isn't just some dry policy paper. Think about it, a task force convened at the highest level of government to study and recommend the future of digital assets in America. What kind of recommendations will they make? Will they be bullish, paving the way for mass adoption? Or will they introduce regulations that could stifle innovation? And what's the one specific, almost hidden detail buried within the preliminary discussions about a National Digital Asset Stockpile that could send shockwaves through the market and disproportionately benefit certain assets? Keep watching, the implications are massive. Let's break down this Wednesday double whammy. First, the FOMC. The Federal Reserve's decision on interest rates is always a big deal. Think of interest rates like the price of borrowing money. If rates go up, it becomes more expensive for businesses and individuals to borrow, which can slow down the economy and make riskier assets like crypto less appealing in the short term. The market largely expects a pause on rate hikes this time, but any unexpected hawkish comments could trigger a temporary sell-off. That's why Bitcoin's struggling to break $120,000 and Ethereum's facing resistance around $3,900. These are key levels to watch. But the real game changer for crypto on Wednesday could be the President's Working Group report. Remember President Trump's executive order? He wants America to be the crypto capital. This report is the roadmap. It's expected to lay out potential regulatory frameworks for everything from stablecoins to exchanges. And here's the juicy part, the potential creation of a National Digital Asset Stockpile, possibly including cryptocurrencies seized by the government. While the exact assets are still under wraps, the mere suggestion of the U.S. government holding a strategic reserve of digital currencies like XRP signals a massive shift in perception and could attract significant institutional interest to the entire asset class. This report could provide the regulatory clarity that big money has been waiting for, potentially overshadowing the immediate impact of the FOMC news. So we've got potential short-term market jitters from the Fed, but a potentially massive long-term bullish signal from the White House. It's a tug-of-war, right? But amidst all this, there's a silent revolution happening in how money moves around the world. A fundamental upgrade that could disproportionately benefit specific cryptocurrencies designed for this very purpose. Why are major financial institutions and payment processors increasingly looking towards decentralized solutions for cross-border transactions? What are the inherent limitations of the current system that these digital assets aim to solve? And why are XRP and XLM, often seen as pioneers in this space, potentially on the verge of a major resurgence that could leave slow-moving incumbents in the dust? The answer lies in a critical global standard you might not have even heard of. The secret is ISO 20022. Think of it like upgrading from dial-up internet to fiber optics for global payments. It's a new standardized language for financial institutions to communicate payment information. It's richer, more detailed, and allows for faster, cheaper, and more transparent transactions across borders. Now, why is this huge for XRP and XLM? Because they were essentially built for this new financial highway. XRP, with Ripple's technology, aims to be a bridge currency, facilitating near-instant and low-cost international payments. The recent fictional for this scenario resolution of the SEC lawsuit has removed a major roadblock, paving the way for wider adoption by financial institutions who were previously hesitant. The mere mention of XRP in discussions around a National Digital Asset Stockpile further underscores its potential role in the future financial landscape. XLM, Stellar Lumens, shares a similar vision, focusing on making cross-border payments accessible and affordable for everyone. Its efficient network is designed for high throughput and low fees, making it ideal for remittances and smaller international transactions. Both XRP and XLM are inherently compatible with the ISO 20022 standard, giving them a significant advantage as this new global payment infrastructure rolls out. This Wednesday's news, combined with their foundational technology, could be the catalyst that finally unleashes their full potential. While the veterans XRP and XLM are gearing up for a potential resurgence, there's a new generation of blockchains emerging, built from the ground up to tackle the scalability challenges of Web3. We've seen SUI experiencing a significant pullback recently, almost 9%. Some might see this as a sign of weakness, but what if it's merely the coiling of a spring, a necessary consolidation before a massive leap forward? What makes SUI, despite being a relatively new Layer 1 blockchain, so different from the older generation? What unique architectural innovations does it possess that could allow it to handle the demanding needs of future decentralized applications, potentially outperforming even some of the current market leaders? And why is this current pullback potentially the perfect entry point for those who understand its underlying potential? SUI is built on a fundamentally different architecture that allows for parallel transaction processing. Think of it like this. Most blockchains process transactions one after another, like a single checkout line at a store. SUI can handle multiple transactions at the same time, like having dozens of checkout lines open simultaneously. This allows for incredibly high throughput and low latency, making it ideal for demanding applications like decentralized gaming, high-frequency DeFi, and social media platforms with millions of users. SUI utilizes the Move programming language, known for its security and focus on resource management. While the recent pullback might be concerning to some, it's often a natural part of the price discovery process for newer assets. We could see SUI retesting key support levels, potentially around the $3.60 mark, as the competitor mentioned, before its next potential leg up. This isn't a sign of failure, it's the market finding its footing. For those looking for Layer 1 solutions built for true scalability and user experience, SUI is a project to watch very closely. Its innovative architecture and growing developer ecosystem position it as a strong contender in the next phase of Web3 growth. We've talked about payments with XRP and XLM, and scalable applications with SUI. But what about the underlying infrastructure that will power the entire decentralized web? The backbone that enterprises and governments will rely on for mission-critical data and transactions? Why are some of the biggest companies in the world, names you see and use every single day, quietly building their future on one specific distributed ledger technology? What are the unique characteristics of this technology that make it the clear choice for enterprise adoption, offering a level of stability, security, and sustainability that others simply can't match? And how could this silent, steady adoption lead to a monumental, yet often overlooked rise in the value of its native token? The answer lies in XRP HBAR. Unlike traditional blockchains, XRP utilizes a hashgraph consensus mechanism. Think of a blockchain as a single file cabinet where everyone has to wait their turn to access information. Hashgraph is like a distributed network of supercomputers all verifying transactions simultaneously, making it incredibly fast and efficient. The numbers are staggering. XRP can handle tens of thousands of transactions per second with incredibly low, predictable fees, fractions of a cent per transaction, paid in HBAR. And unlike many other networks with hefty carbon footprints, XRP is carbon negative, a crucial factor for environmentally conscious enterprises. But perhaps the most compelling aspect of HBAR is its governing council, comprised of some of the largest and most reputable organizations in the world: Google, IBM, Boeing, Dell, LG, and many more. These aren't just partners, they govern the network, providing stability, trust, and enterprise-grade oversight. We're already seeing real-world adoption, Avery Dennison using Hedera for supply chain tracking, Drop for micropayments, and various initiatives in tokenized carbon credits and digital identity. While the price action of HBAR might sometimes seem less volatile than other meme coins, its fundamental strength lies in its real-world utility and enterprise adoption. This Wednesday's broader market updates, combined with Hedera's ongoing development and adoption, could set the stage for a significant and sustained upward trend. So, as Wednesday approaches, remember this: the market may see short-term fluctuations based on the FOMC and the initial reaction to the government report. But the underlying fundamentals for select altcoins like XRP, XLM, and SUI, and especially for the enterprise-grade infrastructure of HBAR, remain incredibly strong. XRP and XLM are poised to capitalize on the evolving global payments landscape. SUI is building the next generation of scalable decentralized applications. And HBAR is quietly becoming the backbone for the future web, attracting serious enterprise adoption. Don't get caught up in the daily noise. Focus on the long-term trends, the fundamental value propositions, and the real-world adoption that is already underway. Wednesday could be the catalyst that ignites the next significant leg up for these promising projects. Be prepared, stay informed, and position yourself for the future of finance. You now have a clearer understanding of what's coming this Wednesday and the potential impact on your favorite altcoins. You're equipped with knowledge that most casual investors simply don't possess. But your journey doesn't end here. To truly prepare for what's next, you need to go deeper. You need to understand the specific catalysts that could unlock the true potential of HBAR, the real-world applications that are already driving its adoption, and the long-term vision that makes it such a compelling investment. That's why you absolutely need to watch our next video, HBAR Unlocked, the Future of Enterprise Crypto. Click the card on your screen right now. We'll dive even deeper into Hedera's technology, its growing ecosystem, and the specific reasons why it could be one of the most transformative assets in your portfolio. Don't just react to the market, understand it. Take control of your financial future. Click that video now, and let's continue this journey together. Hit that like button if you found this valuable, subscribe for more in-depth analysis, and ring the notification bell so you never miss our critical updates. Your crypto future starts now.